Hello and welcome to our Mines and Money 5 at 5 show, which today is sponsored by Dore Copper, Golden Valley Mines and Royalties, and is brought to you in association with Resource Global Network. For those of you who don't know, we started the first 5 at 5, 5 guests at 5 p.m. back in April 2020. We intended it as a stopgap weekly 60-minute show, which would bring the industry together whilst we were dealing with a downturn and whilst we were dealing with lockdown and COVID-19. 16 months on, we're now on episode 88. A few announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you can either submit them in the chat box, which is at the bottom of the screen, or you can also go and wave your hand virtually. We can go and unmute you, and then you can ask your question live. For this week's show, we have a Quebec theme focus, and to discuss this, we have a great lineup of guests. They are Glenn Mullan, President and Chief Executive Officer of Golden Valley Mines and Royalties; Ernest Mast, President and Chief Executive Officer of Dore Copper; Matt Geiger, Managing Director of MJG Capital Management; and John Zadkovich, Director of King Seed. So let's start off with a polling question. Perhaps we can have our polling question up on the screen, Elaine. Nice, easy one to get you all voting. What is your view of Quebec as a mining jurisdiction? Very positive, positive, neutral, negative, or very negative? And whilst you're voting, let's go and ask our panelists. Matt Geiger, what's your view on Quebec?
Good. Thanks for having me on the panel here, Andrew. Good to be joining these esteemed guests. So on the Quebec front, I have a very positive, extremely positive view actually of the jurisdiction. You know, of the 22 positions that we hold in the MJG fund, we hold a pretty concentrated portfolio. 3 of them are exclusively focused on Quebec for roughly an 11% weighting. And our Canada exposure as a whole is around 30–35% of the fund in total. So Quebec makes up about a third of that. We also, however, have 4 names with a presence, or 4 additional names with a presence in the province, but that are also focused elsewhere globally. As many of the listeners may know, in Fraser Institute's latest rankings, Quebec was ranked 6th. Out of 77, I believe, mining jurisdictions globally in the most recent survey. This would make it the 2nd best province in Canada from a mining perspective, behind only Saskatchewan. And there's only 2 provinces in Canada that have ranked within the top 10 globally 4 of the past 5 years, and that is both Saskatchewan and Quebec. So, you know, there are quite a few advantages to the province, and I'll try to run through these quickly here. First would be a quick turnaround in terms of exploration permits. 50% of the companies, and this is according to Fraser, received exploration permits within 2 months or less, which is double the rate of Canada as a whole, which is around 25%. So regulatory authorities are quick to get drill permits in particular to companies, which helps foster exploration. There's also pretty solid certainty in terms of timelines that are given by regulators. So roughly half of the companies active in Quebec say that regulators 80 to 100% of the time deliver on expectations, which is pretty impressive. That also is head and shoulders above the rest of Canada. There's also transparency. This is a particularly important point of any province or state within Canada, the United States, Australia. Quebec is #1 in terms of transparency of the permitting process. So there's no black boxes. You know, who's looking at your project, who's looking at the permit, and the timeline expected for that. So permitting front checks a lot of boxes. The geological endowments also a point that should be touched on. There's a whole grab bag of commodities across the province, whether you're focused on precious metals, base or industrial metals, energy metals, it's all there. So whole different types of exploration geologists can find their home in Quebec. Population density, another point to touch on. Obviously, Quebec doesn't compete with, say, the Yukon or Newfoundland. In terms of other top mineral jurisdictions, it's quite sparsely populated at roughly 5 people per square kilometer. For some context, Nevada is roughly twice that number at 11. And then Ontario is at 15, so more than 3 times more populated from a density perspective. So that's quite important permitting wise. Another point that's unique to Quebec here is the support of Quebec Inc. There's a whole host of quasi-governmental investment groups that are strong backers of Quebec-based companies with Quebec-based management teams. This is quite unique, at least in terms of first world jurisdictions, and help provide a strong shareholder base for companies active in the province. 2 more points. One would be flow-through financing. That, of course, is not unique to Quebec as a jurisdiction. It is unique to Canada, though. And flow-through, in short, allows companies to secure quite attractive terms in order to raise money, as long as that money is going to go into the ground in terms of the exploration expenditures and it's put into the ground within the next year. And so from a dilution impact, this is quite a helpful advantage afforded to Canadian companies generally, but a key advantage over, say, Canadian listed companies based in the United States or elsewhere in the world. And then finally, and I would say this is perhaps the X factor for Quebec, maybe the most important point, and it's growing in importance, is the province's reliance on hydropower, hydroelectricity for energy generation. Roughly 97%, so almost 100% of the province's energy needs are met by hydropower. And that's significant for a few reasons. It's cheap, it's dependable, but most importantly, as we continue to go deeper and deeper into this ESG investing framework, this is going to be a key differentiator for projects, particularly those focused on energy metals, but really across the metal spectrum in terms of reducing one's CO2 footprint. And so all else equal, if you have a project, whether open pit or underground, supplied by hydropower, that's going to be viewed favorably and increasingly favorably in the eyes of investors, in the eyes of potential partners, in the eyes of potential acquirers down the line. So, all of these are pretty important aspects in favor of Quebec, but I would say hydroelectricity and the reliance on that of an energy source is perhaps at the top of the list.
Mm-hmm. And turning to John Zadkovich of Kingseed, how would you have voted in that poll on Quebec? And again, what has been your experience of Quebec?
I'd also, I echo Matt's comments, very positive insofar as Quebec is concerned. It's, of course, in a tier 1 jurisdiction. It has a very long history in the mining sector. It has a very strong legal and regulatory system to support the mining sector, favourable tax regime. As Matt's touched upon, there's an abundance of resources and commodities across a myriad of different spaces. So it's actually quite spoiled in that sense. Very, very strong infrastructure as well, as Matt has also highlighted. The hydro, insofar as we continue towards the energy transition and ESG credentials are key, a lot of investors are starting to look to green power, and hydro is a great source of power in that sense. Quebec's also got, given its history in the mining space, great labour, a huge pool of qualified engineers there as well. From a cost perspective, compared to most G7 countries, it's very competitive on a cost basis too. Matt's already touched upon as well the Fraser Institute. Anybody that's not looked at that, I'd invite you to do so. Glowing praises for Quebec. As Matt also said, transparency has been highlighted. That is absolutely fundamental for anybody investing in the sector. I suppose from a foreign investment perspective, the only 2 question marks one might raise with respect to Quebec is language and the legal system in Quebec, in the sense it's civil as opposed to common law. However, neither of those are insurmountable, and they're quite readily addressable in Quebec. So for me, it's yeah, a very positive view as to investing in Quebec.
Andrew,
And,
can I add one
really-
more? Can I add one
please.
more challenge to what John mentioned? I think those are important points. The other one would be accessibility, especially on an exploration perspective. It's quite swampy across much of the province, and so you can be limited in terms of when you can drill, whether you want to wait for winter and more solid conditions or go out on a barge, and that can increase complications and expenses. So I would add that on top of language and legal system as at least, you know, potential points of concern, just to be balanced.
Yeah, and I guess it's bringing in our two mining guests. Turning to Ernest Mast first, what attracted you to Quebec? Was it, you know, hydropower, as sort of like Matt mentioned earlier on? Was it something else, or?
Yeah, thanks for having Dore Copper. We're proud to be a sponsor of this 5-on-5. What really attracted us at first was the mineral endowment of the area we're in. We're located around Chibougamau, Quebec, and this is the eastern edge of the Abitibi Greenstone Belt and mining area. So that was definitely the first attraction. But following that are the advantages of being in the province, in that we're really located close to a mining town. And a mining town means you're going to get a lot of support, in some cases unconditional support for your mining project. You're able to talk mining with the mayor of the town. You're able to talk mining with the council. When you talk with the First Nations that are in the area, they're very experienced with mining. So really the affinity for mining in Quebec goes deep. It's a long history. It's even the provinces. The province also has an official strategy regarding mining of strategic metals and critical metals, and they really support mining in the northern part of the province as the main driver of economics as we go forward.
Mm-hmm. And Glenn, I mean, what attracted you to Quebec?
Well, I was born here, and so
that
was certainly a critical part of it, and moved to the north on graduation day, which was 35 years ago. But with that said, part of it was with the benefit of having looked at competing jurisdictions, including Timmins and Kirkland Lake, Ontario, which are not far away, about 2 hours from here, and Dawson City in the Yukon, which was the other place I was considering more or less relocating to and embarking on independent prospecting ventures. But one trip to Val-d'Or changed everything, and it's just, by far, it struck me as being the most progressive, positive mining exploration, mining development, and mining producing town of which I was aware 35 years ago, and my opinion hasn't changed. It's still one of the most dynamic places, pro-mining, absolutely pro-development, and all of the reasons listed by both Matt and John: hydroelectricity, community engagement, First Nations engagement, all of those are critical parts of what makes Val-d'Or very successful. So municipal support, provincial support, federal support, good infrastructure, fabulous geology, and Val-d'Or is definitely the gateway to the north. So other than the Abitibi Greenstone Belt, of which we're well located, more or less in the center of it, Val-d'Or is also a gateway to Nunavik and Bay James, or James Bay in northern Quebec. And a lot of companies that are doing exploration development in the far north use Val-d'Or as their gateway. So I think for all of those reasons, Val-d'Or has always been or northern Quebec has always been a very attractive environment.
Okay, so I think that with that we can have our polling result just up. I think we can see that majority, 54%, were very positive about Quebec as a mining jurisdiction. So staying with Glenn, I'll just give you sort of a brief background about Glenn, just while Glenn goes and gets his slides that he's going to share with us up on the screen. Glenn is chairman of the board, president and chief executive officer of Golden Valley Mines and Royalties, has over 40 years experience in the mining and mining exploration industries, As an independent prospector, Glenn has assembled and acquired many mining prospects, ranging from grassroots ventures through advanced stage projects. Glenn was instrumental in assembling many of the properties comprising the portfolio now explored by Golden Valley Mines and Royalties and its related entities. And last but by no means least, Glenn is the former president of the Prospectors and Developers Association of Canada, better known as PDAC. So Glenn, if you're able to go and share your slides, the floor is yours.
Can you see the slides right now?
No, not at the moment. Do you want to have a it's a site technical glitch? Do you want to have another go?
Yeah, I've thrown it up, but I thought it was live. Give me a moment.
The joys of live broadcasting.
Always. Try number 2.
That's absolutely perfect. And you should be able to do a full screen and then you're ready to go.
Yeah, I'm trying to figure out where the full screen icon is. It's a slightly different format here.
I think it's those 2 arrows on the bottom right next to the printer. I think. Perfect.
Is that working? Is that a full screen for you
yeah,
now? Close enough?
Yes, good.
All right. So I skated right past, sorry, Canadian metaphor, skated right past the disclaimer, but it's deliberate that it's included. I think our council would be frustrated if I didn't show it. In any event, I want to go right into the main theme. So stock performance, and in particular versus the price of gold and the resident exchange on which we're housed, the TSXV, as it's called. So that's the light blue line, the index at the very bottom, and the price of gold being the trailing gold line at the bottom, and then Golden Valley's stock performance being the dark blue line. So what I guess I'm hoping to show you is that we've definitely outperformed both the price of gold and the general market index. And that's related to some specific catalysts that are also very Quebec specific, namely assets that we hold in this province. So moving along, this is actually our business plan in a single image. The large circle on the left would be Golden Valley Mines, and the smaller circles on the right would be the contributing components and how each one of them helps contribute to Golden Valley's business plan. The top 3 circles, Abitibi Royalties, Val-d'Or Mining Corporation, and International Prospect Ventures, were actually spun out of Golden Valley 10 years ago in a plan of arrangement. And it's the first, and I believe only time, anyone has ever done a triple spin-off on the same day on the TSXV. The reason we did that was because of a fairly negative and life-changing paradigm, which was called Canadian Royalties, Inc. And I actually lost that company in a hostile takeover to a Chinese metals company. And with the benefit of that negative experience, we wanted to make sure that that did not happen to Golden Valley Mines. And we had quickly identified that there was an asset not far from where I'm resident in Val-d'Or, Quebec, called Canadian Malartic. And we assumed that that would similarly be at risk of a potential interloper or someone else who would be looking in a predatory manner at acquiring that asset. So we spun out the royalty or the property and created the royalty, which is now called Abitibi Royalties. So Golden Valley retains 45% or the largest single shareholder of Abitibi Royalties. And its focus is the royalties at Canadian Malartic, the largest gold mine in North America. Val-d'Or Mining Corp and International Prospect Ventures are quite different in their business model or strategic plan. They're both prospect generators. Val-d'Or Mining Corp, as the name implies, works in the Abitibi Greenstone Belt, Quebec and Ontario. And International Prospect Ventures, as the name implies, works outside Canada, namely Western Australia. So Western Australia and Quebec are deliberately our key focuses, and other speakers have mentioned the Fraser Institute, and certainly 2 of those jurisdictions rank among the top 10 and have consistently for decades. And only in Quebec would dropping from number 5 to number 6 in the Fraser Institute's rankings cause concern by the government and regulators. They're actually trying to improve that ranking and trying to do that by streamlining some of the administrative policies, and some of the government support that we've enjoyed, and namely the Quebec Inc. and the institutions based in Montreal and some of the regions that support the mining industry. And the bottom circle on this slide shows you the conventional part of our business plan, which would be arm's length joint ventures. So those are other public companies who are earning an interest in Golden Valley's properties by spending their funds and paying consideration to Golden Valley in return for earning an interest in what were 100% owned properties. So collectively, what I'm trying to show you on this image is that we've found a way to avoid dilution to our share capital. So that's the key investment thesis. We're trying to avoid dilution. Why would we want to dilute ourselves when the largest shareholders are the board of directors and management? And so I think that's a distinguishing feature of the way that Golden Valley operates. And I guess just in terms of a few metrics, this slide shown in Canadian dollars, the top right gold box would be our market cap in Canadian dollars. The middle line, far right gold box, would be the net asset value, the sum of the parts. What are the securities worth that are wholly owned by Golden Valley if they were to be liquidated today at the market rates? And that net asset value gap is exactly the investment opportunity. And that's before we talk about the royalties and properties and joint ventures and cash and dividends. Really, the value of the securities that we own in Golden Valley exceed the market cap by about 30% on any given day. And so I think that's a distinguishing feature. And to just move things along quickly, this is what Abitibi Royalties actually owns. The large light gray patch on the upper left would be the open pit at Canadian Malartic Gold Mine, largest gold mine in North America. 700,000 ounces, more or less, produced in the past 12 months, over 600,000 ounces produced in the past decade each year, and undergoing ferocious growth at this time through development of the largest underground industrial project in Canada. So they're now developing the east side, which is exactly where our 3% net smelter royalty is, if you can see my cursor, called the Odyssey. And it's actually brand new signs on the highway calling it the Odyssey Mine instead of the Odyssey Project. And very happy to see that, given that the shaft and the two ramps that are being excavated are in the middle of the 3% NSR owned by Abitibi Royalties. So that's the key focus asset that's owned by Abitibi. Again, 45% owned by Golden Valley Mines and Royalties. And certainly that's a distinguishing feature compared to most of our peers. Moving things along, this would be International Prospect Ventures, upper left, in Western Australia. The red properties, they don't look very big on this map, but that's 255,000 acres or 100,000 hectares in the Pilbara, Western Australia, quite like the geological concept developed by Dr. Quinton Hinai from Vancouver and Novo Resources, paleo conglomerate hosted geology for the most part. A lot of skeptics out there. We don't rank among them. We're quite enthusiastic to test our own luck in the Pilbara. We've had some good success with independent prospectors conducting non-invasive prospecting on that properties over the past 12 months. And the lower right showing you the Abitibi Greenstone Belt, the Quebec-Ontario provincial line being the dark line that transects north-south, and all of the dots, the gold dots being Val-d'Or Mining Corporation's 100% owned properties in the Abitibi Greenstone Belt, and the green triangles being our base metals properties, mostly copper, zinc, and a couple of nickel copper assets in there as well. And typically we do the same business plan with Val-d'Or that we did with Canadian Royalties, Golden Valley, Abitibi. We acquire properties by staking, we own 100%, we find partners, we use other people's money to avoid dilution to our share capital, we allow for early and easy vestings to create the royalties. So effectively, we stake the properties, we use very standard geological hypotheses to test and advance the properties, we use other people's money to avoid dilution to our share capital, we create royalties, and we retain the royalties. And that's really the thrust of our business plan. So no debt, minimal dilution. In fact, for most of the past 5 years, 4 of the past 5 years, no dilution at all. And the largest group of shareholders are the board of directors, followed by Quebec government institutions, La Caisse du Dépôt, the FTQ, and SIDEX, to name 3 of those institutions. So with that, I'm happy to turn it over to our panelists or to entertain questions. And thank you for the opportunity.
Thank you very much for that, Glenn. Perhaps bringing in Matt Geiger first. What questions do you have for Glenn?
Well, Glenn, just a quick Quebec-based question. You're proficient in French. Would you have had the success that you've had in the province if that was not the case?
Definitely. So it's an obvious question to ask. It's the one kind of the island in the sea in North America, a province with a population of around 10 million in a continent with a population of 360 million. So fairly obvious that that would be seen as a challenge by people from outside. But in practice, the Quebec government, institutions, residents, they're all driven by economic development primarily. And certainly the culture is a fundamental difference to the province's mosaic, but I see that as an advantage. Quebec has achieved some great things compared to its geographic neighbors, namely New Brunswick and Ontario, in particular, fostering very harmonious and progressive relations with First Nations communities. It was Hydro-Quebec that actually developed the business template for development in the far north in James Bay. And I think Hydro-Quebec have done a great deal for a service to the industry by establishing the business template that the mining industry has really followed. And so that's a strategic advantage. And given that we do work in Quebec and Ontario, both sides of the provincial line, I can tell you that Quebec is a lot easier to work in for permitting, for exploration, for drilling, for development, for production than our counterpart across the provincial line in Ontario. Ontario has great geology, but it has its own challenges, and they're very different than Quebec. Language is not an impediment, it's an advantage.
Another quick one, Glenn. Oftentimes on viewing things through an ESG framework, investors are, development stage and production stage companies are generally the emphasis there. Are you guys doing anything on the ESG front as a prospect generator? And if so, can you share?
Yeah, just a couple of quick examples of real case histories. One of them is called FRAN, Fonds Restauration Nunavik, which means Abandoned Mine Sites Cleanup in the far north. So the northern third of Quebec would be the Nunavik region. And about 15 years ago, some of our Inuit partners and friends, neighbors, to Canadian Royalties at that time, had brought to our attention that they were quite frustrated with predecessors and other mining companies that went north, brought all kinds of fuel drums and camps, and abandoned everything after they left. And that after nearly 100 years of mineral exploration, there were over 600 abandoned mine sites. Turned out they weren't all mine sites. Some of them were hunting outfitters and so on. But together with our Inuit partners, with the Zadkovich regional government, KRG, with the Quebec government, and industry, we had fantastic industry support. Over 30 mining companies supported the initiative. We started cleaning up those sites, and we've now cleaned up more than 2/3 of them, over 400 sites. And so the people that actually participate and do the physical work are the residents of those northern communities. So they become promoters of our industry. And that's really helped change not just the optics, but the relations that we have domestically. And another one in the town of Val-d'Or, there's a project called Le Chateau de Mariève, a safe harbor for mostly those most at risk, who would include, for the most part, Indigenous women from northern communities who end up in Val-d'Or. And so a lot of those women end up in Val-d'Or without bank accounts, without jobs or training or skills, have substance abuse problems or other problems, and therefore become victims of society. And so Le Chateau de Mériève is a project that's conceived in Val-d'Or, supported by the mining industry, to name the obvious companies like Agnico Eagle, Yamana, drilling service companies, our own several other juniors, the town of Val-d'Or, the provincial government in Quebec, and the Chateau de Mériève will be opening in March. And we're fiercely proud of what it, at least what we hope it will accomplish. And the challenges are many because we're a northern community. You know, we're 6 hours north of Montreal. Our mayor likes to call it the crossroads. It's the northern limit of southern infrastructure and the southern limit of northern Quebec and northern Canada. And so we do connect at the crossroads, and you know, these are opportunities for us together with the industry. So those are two, but there are others. I won't bore you with the hockey programs that we support.
Time for a question for from John of Kingseed.
Glenn, thanks for the presentation. I was having a look at your materials earlier and some of the financials. I mean, the insider shareholding position is very encouraging, as you note. The share price over the last several years is also very buoyant. I was keen to get a little bit more colour as to the royalty position with respect to Abitibi royalties. In particular, it seems you focus primarily on the early stages. If you could give us some context as to, do you have a preference for NSR or NPIs, what type of rates and terms, and what you're generally looking for in assets when you're entertaining, offering a royalty or investing?
Thank you for the question. Well, definitely geology first and potential second. So we prefer NSRs, obviously a much better asset to own outright. The way we try to create them is by staking properties. So therefore we own 100%. We allow a partner to spend their money to earn majority interest. At vesting, that creates or triggers either or both of a free carried interest and an NSR. And so we do have free carried interests, or FCIs, and NSRs in a multitude of properties at the Golden Valley level. On the Abitibi royalties side, given we own 45% of it, we have purchased several arm's length net profits interests from independent prospectors and other public companies that were seeking financing. And most of the other properties are properties we staked and allowed early and easy vestings to trigger the creation of royalties. And so those are most of the royalties that we now own around Malartic and Val-d'Or, Quebec. Most of them are concentrated in northeastern Quebec, although we have a couple in northwestern Ontario and even the Republic of Turkey.
Okay, thank you very much for that, Glenn. We'll be coming back to Glenn later on in today's show, but I'd like to move on to our next update. And our next mining update is from Ernest Mast, who's President and Chief Executive Officer of Dore Capital. Ernest has over 30 years of experience in various technical and executive roles in the mining industry, across a wide range of commodities, geographies, and development stages. Ernest is on the board of Scotty Resources. Ernest has also held the positions of President and Chief Executive Officer at Primero Corp, Vice President of Corporate Development at Copper Mountain Mining Corporation, Vice President of Operations of New Gold, and President and CEO of Minera Panama, developing the $6 billion Cobra Panama project. Ernest, the floor is yours.
Thank you very much, Andrew, and pleasure to be here. I'll go over our corporate presentation. Just confirming everyone can see the screen.
Yes, we can.
Okay, great. Let me just. So what Dore Copper is looking to do is establish Chibougamau, Quebec as a mining town again. The mines here operated from the 1950s to 2008. And we currently are looking to put in a hub and spoke type operation where we have a number of these mines come back into operation. You can see that we have a number of properties. We actually have 13 different mining properties. We're concentrating on 4 or 5 at this time. And the properties are a mix of copper and gold. So some of the properties such as Corner Bay and Devlin are principally copper deposits. Some of the properties, such as Joe Man, is principally a gold deposit, while Corner Bay, Cedar Bay and Copper Rand are a mix of copper and gold. It's a very close-knit area. So the biggest distance we have is 60 kilometers from Joman to the Copperand mill. In mentioning the mill, I should say that the mill is actually in place. We have a tailings facility in place. We have road infrastructure in place, and we can operate here all year round without a problem. The town of Chibougamau is in the eastern part of the Abitibi region geologically, but from a cultural point of view, it's more affiliated with the Lac Saint-Jean, Quebec City area, say, that it is with the known Abitibi area of Val-d'Or and Rouen. Our PEA is currently just ready to commence, and we're anticipating finishing it by the end of the year. The company's strong points are the following. First of all, these are brownfield assets. So the assets are well understood. A lot of them have previously been into operation. The cost of putting a brownfield into operation is a lot less than putting a greenfield into operation. And there's already quite a bit of knowledge about the assets already. The company's focused on high-grade copper and gold. As I mentioned, some of the properties are high-grade copper with a little bit of gold. Some of the properties are high-grade copper with high-grade gold with a little bit of copper. And then there's other deposits that are a nice mix of copper gold, almost being 50-50. So this gives us really a lot of optionality in the market in terms of which deposits or how much gold, say, content production we'd like in our mix. The deposits also have expansion and exploration potential. So currently we're evaluating the pipeline of projects in order to feed the mill. The team we've put together has a lot of experience with underground mining, with operating in Quebec. Like Glenn, I'm a native of Quebec, so I am fluent in French. And most of our team is, in terms of on the operating side, most of our team is also bilingual. We've put together a balanced board of directors with experience in finance, community, geology, and operations. And finally, being brownfield assets, we have infrastructure. We have a mill, we have a tailings facility, we have power to the different facilities, and this is all hydroelectric power as we're connected to the Quebec grid. You can see Chibougamau is 500 kilometers due north of Montreal and approximately 300 kilometers to the northeast of Quebec City and about 400 kilometers to the northeast of Val-d'Or. Our principal deposit is the Corner Bay deposit. This is principally a copper deposit. We're currently doing a 30,000 meter drill program. We've had very positive results from the drill program in a number of press releases that have been issued over the course of the year. And on the next slide, I'll show you some of the core and some of those results. The deposit is on the southern side of Lake Chibougamau. When we acquired the deposit in 2017, it had 1.5 million tons of resources at over 3% copper. We did drilling as a private company, and we increased the resources to 3 million tons.
We seem to have slightly lost you, Ernest, just for 5 seconds there.
Oh, okay. I'll
okay,
go back.
But you're like back now.
Okay, sorry about that. Okay, I see that. So the Corner Bay deposit, when we acquired the deposit, it had 1.5 million tons, and then it increased to 3 million tons with the drilling we did as a private company. We're just on the cusp of issuing an updated resource estimate where we anticipate we're going to be over 5 million tons. There's actually few deposits in the world that are 5 million tons and over 3% copper, and we have one of them in a fantastic jurisdiction being Quebec. The deposit is open in a number of directions, and we continue to do exploration over the course of the year. Here we see a long section or an isometric view of the deposit. What we see here in orange is the 2019 resource. We've expanded it in the section in blue with our drilling in 2020, and then the drilling in 2021 has further expanded out the deposits. One of the great things, a long strike and down dip, and we're getting very consistent results. The intercepts are between 3 and 7 meters. and the grades are between 2.5% copper and 9% copper. And as a kicker, there's up to 1 gram per ton gold as a byproduct, or as a 1 gram per ton gold. And in addition, there's about 15 grams per ton silver. The mineralization itself is very clean, so we have very low levels of impurities that could be deleterious for smelters. Therefore, this is going to be a very marketable concentrate, very high grade, very pure chalcopyrite concentrate. We continue to drill in different directions. We're currently connecting these two areas, the deep lens and the main vein below the dike. And then we're also drilling the upper part of the mine down plunge, and then we're drilling the main vein along strike. In addition, about 200 to 250 meters east and west of this are other vein showings that will be added into the resource, and we'll continue to drill those over the course of the year.
Okay.
Here you see on this map the location of the mill. The Copper Rent Mill is located approximately 14 kilometers away from the town of Chibougamau. So it's a commute operation. We're not going to have to build a camp. We're not going to have to operate a camp. We're going to get our employees locally. We'll be able to attract people to move to Chibougamau in order to work at the mine. The mill was last operated in 2008, and there's a tailings facility approximately 1.5 kilometers away from the mill. The tailings facility has 8 million tons of capacity. Our plans for 2021 are 50,000 meters of drilling. The majority of that is going to be done at the Corner Bay deposit, and with that, we'll continue to expand out the deposit, and we'll start at one point to start to do infill so we can get all the resources into the indicated category. We will be awarding the PEA, and in starting the PEA, we'll start to look at the specific rehabilitation plans for the mine, the mill, and how we're going to operate the tailings facility. And as well, we have excellent relationships with the First Nations community, and we're going to put in an official pre-development agreement. During 2022, we'd like to advance to a more in-depth study, and in that, we'll do similar work as we're doing now, except the work will be much more detailed and much more focused, as we'd like to get to a production decision as soon as we can. This is our forward-looking statement, and here's our contact details.
Okay. Well, thank you very much for that, Ernest. That was an excellent summary of Dore Copper. Perhaps I can first of all throw it open to John of Kingseed. What questions do you have for Ernest?
Thanks, Ernest, for the presentation, which is very helpful. Having had a look at the company's profile, again, strong insider position, which is always comforting. You're well placed from a cash perspective as well. I share your sentiments as to investing in acquiring a brownfield asset as opposed to greenfield. And on that, noting that the plant has been closed since 2008, and I think your materials suggest you're aiming for near-term production subject to permits, etc. Could you please perhaps shed some light on the status or the quality of the infrastructure you've got on site at the moment, and how much that may take to turn around to make it fully functional again?
Okay, so the plant last operated in 2008, and it was shut down in an orderly fashion. Since then, it's really just been a static situation at the plant. So we're going to start to come in, evaluate the equipment. We've done some preliminary inspections, say on the mill gears, on the flotation cells, and the majority of the equipment will be reused. There'll be a couple of cases where we're going to upgrade the plant. So for instance, we're going to put in a modern control system, probably based on a PLC system. There's been quite a few advancements in mineral processing regarding cleaning cells, and we're probably going to go to a newer technology on one bank of the cleaner cells to get better efficiencies than we had in the past. We have a very rough estimate of, say, $15 million for getting the mill back into operation, and that would compare to, say, $75 million for building a new installation. So there's great economies that we have because of the fact that we have a brownfield asset.
Just another question from myself, Ernest. How do you ensure that you're listening to the needs of First Nations?
Can you repeat that, Andrew?
Yeah, how do you ensure that you are listening to the needs of First Nations?
So we have regular discussions with the Ojibwe First Nation. So all of our assets are in the Ojibwe division of the Cree Nation. The Cree Nation was the group that signed that landmark James Bay Agreement with the Quebec government in the 1970s. And the Cree Nation is then divided into smaller political units, and we're dealing with the Ojibwe group. I just had a very good discussion with the chief yesterday, and I do speak with him on at least a monthly basis. And every time I go up to site, I endeavor to meet with him. We're essentially scheduled to present the project to council in the upcoming, I think, October council. And at which, and with that type of communication, with those types of engagements, we ensure really good communications and listening with them. One of the recent additions to our company is Martha Manuel, who's a First Nations leader from British Columbia. And again, having her on the board and in our ear is also very helpful for the company to get attuned, say, to the issues that could affect First Nations. In addition, we'll be hiring many First Nation employees, and as many companies have, we'll have feedback loops within the company to make sure that we hear our employees and our communities' concerns and desires.
Question being sent in from the audience by Joseph Bianco. What is the timeline for the mill upgrade project?
So the timeline for to get the mill operating is related to, say, the permits for the tailings facility and the permits for the mining operations. We're looking at approximately, to get into operations, I would say about 3 years, 2 years for the permits, and then 1 year for dewatering the mines, mainly Corner Bay, and then doing the development work. So we get enough development in place to get to the point where we can start commercial mining.
Matt, questions for Ernest?
Yes, thanks for the update, Ernie. I'm going to put you on the spot a little bit here. Dore has certainly not hidden its ambitions to ultimately consolidate this Chibougamau copper camp. I guess gazing into your crystal ball here, do you think it's more likely that we see first production first from Dore, or whether we see some acquisitions and bringing some of these other parties into the fold before that?
Well, we've done about 3 or 4 acquisitions to date. One of them was the Cornerback property, which surrounds Corner Bay. We did that right coming out of the gate in 2017. We had 2,200 hectares. And then we've done an option agreement for the Joman property, which is adding another 1,900 hectares. And thirdly, we did the option agreement for the Norbo property, which was another 1,600 hectares. However, it's a very big area and there's still a lot for us to do. So it's possible that we will do another acquisition before we get into operation. But definitely, once we're in operation and we've really established ourselves as an operator, the other acquisitions that we can do in the camp will probably fall into place. We have to remember how big an area this is. For instance, just the Cree territory in Quebec is half the size of all of British Columbia. I mean, we're talking about a massive, massive land area in Quebec, and around the Chibougamau area, the closest mining activity to us is the Windfall project and the Bonterra projects, and they're 250 kilometers away from us. So really, between us and them, we view that very large territory is an potential acquisition for Dore Copper.
Question from myself. I think listed on your website, Ernest, you've got 4 exploration projects in your portfolio. Which one are you the most bullish about and why?
I would say it's still the Corner Bay deposit. And the reason for saying that is it's still open in many directions. It's proven to be high grade and very continuous. We've increased the size of the deposit from 1.5 million tons to probably over 5 million tons, which will come out in our resource. There's these parallel veins I talked about. And so all of those combined, that Corner Bay is really the most interesting one. But we've got some 3 kilometers south of the mill. And that deposit historically graded 1% copper and 5 grams per ton gold. And it's only been drilled to about 350 meters. It's open at depth. And it's got some interesting geological characteristics that could indicate the high grade can continue to a much deeper depth, and we could have a significant strike there. But all of our deposits, and we have 13 in total, all have some exploration merit. And on a weekly basis, I jostle with our geologist in terms of let's try and challenge our current thinking of what we're going to drill next. And it's a kind of an iterative process having so many deposits. However, we're very conscious not to spread ourselves too thin, and we've been really focused on Corner Bay, and the success has been there.
Thank you very much for that. I'm just going to ask a question to John of Kingseed now. We briefly touched on ESG and First Nations earlier. I guess one of the big stories in the news last week was about the fact that Rio Tinto still hadn't paid compensation for the destruction of the Juukan Gorge site last year. What is your take on that, John?
If I was wearing my previous lawyer cap, I would say it depends, as all lawyers would. But in a more practical sense, the trigger really for the payment is going to be liability. Is there a legal or contractual or indeed a moral duty to pay? In this instance, it is somewhat moot because the government inquiry disclosed that Rio should pay. And indeed, Rio has been making all the right noises, saying it will do the right thing, suggesting it is amenable to doing so. From an ESG perspective, it would be probably tantamount to suicide to resist any form of compensation. It's just that would not be in accordance with the trends. The difficulty, however, lays in the fact, how do you quantify the damage? And I think that's where the parties are at, as I've read in the materials. If we were talking about, damage to a common chattel or a plant, it's easily quantifiable. But when you're looking at something such as this, which is a one-off cultural asset, it is inherently difficult to fix any sort of figure to that and what it costs the people concerned. So I think we will see at the end of the day, there will be compensation. The parties are currently negotiating, as is my understanding. So it's just a question whether they can actually reach an amicable agreement on quantum at the end of the day.
Okay, thank you very much for that. And I think we've just got time to have one final closing polling question. So if my colleague Elaine can just bring that up on the screen. In which Canadian province are you most comfortable investing? I'm assuming now that Ernest and Glenn would be voting for Quebec, or I'd be a bit surprised after today's five voting for anything else. But I guess more importantly, how is everyone else sort of voting? And whilst everyone else is voting, I'm just going to briefly go to Matt first. What would your answer be? Would it be Quebec as per your opening, as to all the reasons you gave earlier, or would it be Saskatchewan, or would it be somewhere else?
Well, I will say 3 of those options do appeal to me. Saskatchewan, Quebec, and Newfoundland are all in the top 10 within the most recent Fraser Institute. I'm actually not a big fan of British Columbia at all. We have very little exposure within the MJG portfolio. However, sticking with my friends here, I will go with Quebec, mainly due to the people. I know quite a few very solid, competent, honest management teams in this jurisdiction. I'll also say that the prospect generation business model is quite popular in Quebec. For instance, in Saskatchewan, there's only one company that I can think of that employs that business model, whereas in Quebec, there's at least half a dozen publicly traded prospect generators that come to mind, Golden Valley, and then the sister company Val d'Or Mines being 2 of those. From my perspective, that is the most intelligent way to invest in early stage mineral exploration. And the fact that it's employed pretty commonly in Quebec gives me that much more comfort.
And any particular reason why you're a little bit more cautious from British Columbia? Because I guess sort of thinking out loud, out of the mining companies that come to Mines Money, we get a lot of mining companies from Quebec, Newfoundland and Saskatchewan. But probably British Columbia is probably where we get, I guess in percentage-wise, probably most of our mining companies. What makes you slightly just more cautious on British Columbia? What could it do differently to attract you?
Yeah, well, it'd be the political climate. I mean, I'm from California myself, and I think folks in my neck of the woods think similarly to a lot of voters in BC. Generally, orientation against the extractive industries. Obviously, an incredible amount of mineral potential in the Golden Triangle in particular, and there's some companies doing some really good things up there. I'm just a bit cautious on that region due to the lack of infrastructure, due to the very short work seasons. And also due to the fact that it's very expensive to explore there, and a lot of drilling in particular is supported by helicopters. And so, you know, for those reasons, you can make projects work in that neck of the woods, but the bar is that much higher.
Yeah. And bringing in John from Kingseas, how would you have voted?
I'm kind of split as well. Quebec, for all the reasons mentioned previously, and also I'll go against Matt on this, British Columbia. The reasons being, I've got a number of interests in both. I deal with a lot of clients in both. I'm familiar with the legal regimes of both. So I'm quite comfortable across those two provinces. That said, Matt does raise a very good point. The cost in BC can sometimes be prohibitive. I won't give company examples, but certain of the drilling expenses when helicopters are involved, it's just astronomical, and the economics rapidly fall away. Otherwise, again, BC is also well endowed with some very good commodities, some good opportunities there. I'm split, but obviously for purposes of today and to not alienate myself, I'm going to put Quebec just above BC.
And bringing in Glenn from Golden Valley, I mean, you mentioned earlier that you were born in Quebec. I suppose I should ask, I'm assuming you answered the question would have been Quebec, but I guess as a supplementary question, have you ever had any mining projects outside of Quebec? And if so, what's your experience been compared to Quebec?
Thank you for the question. Yes, we work in the far north in Nunavut, and have worked in the Northwest Territories, diamond exploration, have worked in Saskatchewan for uranium exploration, and have worked, I guess, my entire life through Quebec and Ontario in the north. And certainly Quebec ranks by far number one. I'll go back to the original reason being it has developed very progressive relations with First Nations communities, with Indigenous communities. That's more important today than it ever was during our lifetime. I think Canada is confronting a lot of its legacy right now, right across Canada, and certainly Quebec is no different. But Quebec has been at the forefront of those progressive relations and partnerships with Indigenous communities. And I can't really say the same for the rest of Canada. It's catching up. And a lot of the model that other provinces are using are the Quebec model and template. And again, that's because of Hydro-Quebec with the James Bay Northern Quebec Agreement done in the 1970s. That was a key part of what became the business template now used by the mining industry. So I think as an industry, we've enjoyed certain benefits in this province that other provinces are looking at.
And just, I'm going to ask a slightly different question to Ernest Mast because it's come from the audience and comes from Brazil Zisman. Ernest, if there was one regulatory change I'd like to see introduced to help Quebec become an even better mining jurisdiction, what would it be?
So Quebec really has been very progressive in terms of supporting the mining industry. I think they could take it one step forward if we would like new Quebec mines to try and go with being carbon neutral and having additional incentive for all the mines, or every new mine in Quebec to become carbon neutral. It's very possible in the province to do so because, as we said, nearly 100% of the power is generated via electricity. There's definitely within the Canadian mining industry a move towards electric vehicles, especially for underground mining. And so then there's just a few areas in the mining and processing complex where you could have CO2 emissions And I think that would go very well with Quebec's strategy in terms of supporting energy metals, for instance, where in Quebec there are showings, there's a lot of lithium in Quebec, for instance. There's some nickel, copper obviously is another candidate for that. So I would say that would be one tweak that they could do. But in general, from a finance point of view, from a tax point of view, from an exploration incentive point of view, the regulatory environment that we're working with is very acceptable for a developing, producing company.
Well, thank you very much for that. And I think just the result of our polling question was just edging the other three provinces out, was Quebec in first place with 41%. That brings us to the top of the hour. So all that remains for me to do is to go and thank our 4 guests for this week, and also to go and thank our sponsors, Dore Copper, Golden Valley Mines and Royalties, as well as our media partner, the Resource Global Network. See you next time. Until then, stay safe. Thank you very much.
Thank you.
Thank
Au
you.
revoir.
Bye.